Hello guys, I'm Paris, the options guy, and welcome to the No BS Trading Podcast. We are back after a bit of a break, but yes, a lot has happened during this break, and today I'm going to talk about all of those things because there are some major changes happening globally. Starting off with China, that has announced some major stimulus plans, and I'm gonna talk about it in the coming few minutes and what are its impacts and what impact are we actually seeing right now. And then I'm also going to talk about how SEBI has finally changed FNO rules, or you can say changed some things in the FNO space of India, which are going to have some major impact on some small traders. And I'm also going to talk about that in just a few minutes. And then we are also going to talk about the interest rate decision that the RBI is going to take next week and what are its implications on the market and how will the market react to it. What are you going to, how can you react to it and how can you trade it? And then I'm also going to talk about the CPI and PPI data that is going to come from US, which is actually going to be pretty important, and you should definitely keep that in mind. So all of this we are going to talk about in today's episode. So do watch this episode till the end because this is going to be one hell of an interesting episode. Now first let's talk about what happened in the previous week, starting off with SEBI announcing a few but very major FNO changes in the FNO market of India. Starting off, that SEBI has now decided to increase the contract size for index derivatives from 5 lakh to 15 lakh. That means the lot size of index derivatives will now be 3 times of what it used to be. Okay, so basically right now bank nifty's lot size is 15, right? And in the coming few weeks that will be changed from 15 to 45, and for nifty that will be changed from 25 to 75. Now when this will happen is very simple. Now basically what SEBI has said that any contracts introduced after November 20th will be seeing this change. Okay, so any contracts that will be introduced after November 20th. Now you have to understand that FNO contracts, right? Weekly FNO contracts are only open for the next 3 weekly expiries, right? So that means if today is Wednesday, FNO contracts are only open for the next 3 Wednesdays going forward, right? So that means after November 20th, any weekly expiries which will be introduced. So that means the last weekly expiry that you will see in Bank Nifty and Nifty, which will have the older lot size, that is 15 and 25, will be 11th, will be 11th and 12th of September. After 11th and 12th of December, I'm really sorry, not September, but 11th September and 5th December for Nifty. These will be the 2 dates or the last 2 weekly expiries where you will see the older lot sizes, and after that all the expiries will have higher lot sizes, bigger lot sizes. That means Nifty's first expiry, which will have a bigger lot size, will be 12th December, and Bank Nifty's first expiry, which will be having a bigger lot size, will be 18th December, and that is my birthday. And such a great gift by SEBI, for me, for a small trader like me who doesn't has a lot of funds with himself, because again I trade with a firm. I trade in a prop trading firm, right? Basically, I'm a trader at a prop trading firm. So that's why I cannot trade with my own money, right? And whenever I take trades, it's not with a very big quantity. So again, a very good gift by SEBI for me because I'm a Bank Nifty trader and the first expiry for Bank Nifty with a bigger lot size on my own birthday. What can I really say? I don't know if it's a coincidence or not. Maybe SEBI must have checked my birthday and then decided to exactly keep November 20th as the day to make this change. But anyways, that is out of the thing. That is out of after that, basically we can see that there will only be 2 weekly expiries now onwards. That means every exchange will only get to keep weekly expiries for only one of its index. Okay, so NSE has 4 indices that have weekly expiries right now. That is Nifty, Bank Nifty, FinNifty, and Midcap Nifty, right? These four indices have weekly expiries, and Sensex has actually three indices. Sensex, the normal one, then we have Sensex 50, and then we have BankX. So these three indices are the indices which have weekly expiries. Now Sensex 50 is not a very popular index, you can say, which is known for weekly expiries, but Sensex and BankX are those popular indices, right? So now what SEBI is saying is that every exchange will only get to keep one weekly expiry. Weekly expiries for only one index. So Nifty will need to, NSE will need to choose between four of its indices, but that is Nifty, Bank Nifty, Fin Nifty, and Midcap Nifty. My guess is that NSE will choose Nifty only because it has the highest revenue from Nifty, from Nifty's expiry itself, so it would not want to let go of Nifty. And Sensex has BSE has already chosen Sensex as the one index that it wants to keep the weekly expiries for, because BSE has announced that it will discontinue Sensex 50 and BankX weekly options, right? So that means they are choosing that the normal Sensex will be the one index for which it wants to keep the weekly expiries for. So now we need to look at what NSE does. As of now, NSE has not announced any sort of changes, so we'll need to look into the future, and I'll definitely keep you guys updated on this podcast once those changes are in. And there were some other small changes, like increasing the expiry margin a little bit for option sellers, then actually removing the calendar spread benefit on the expiry day, and then there were some other small changes like this itself. But those were the two big changes, you can say. The change in contract size from 5 lakh to 15 lakh, and only 2 weekly expiries. Okay, so that is out of the question. And now there are many other implications also about this change, and I will definitely link a podcast episode on this change itself. So what happened was that actually SEBI had released a consultation paper a few weeks back with which exactly had mentioned these changes. At that time those changes were not confirmed, but I had actually discussed these changes in a bit of a detail and explain to you guys what will be the implications. Are these changes even useful? But in my opinion, these changes are not useful at all, and they will not really help SEBI to curb the derivatives craze that is going on in India. I think people will still continue to trade in derivatives, or if not derivatives, they will move on to other products like stock options, or you can say, because again, stock options are not seeing any sort of increment in their lot size or anything. Okay, stock options the contract size for stock options will still be at 5 lakhs only. So stock options are not seeing any sort of change. So I think a lot of people will move on to stock options. People still have 2 weekly expiries. That means they still have 2 chances to lose their money every week. So, it does not really matter if you lose money 5 times a week or 2 times a week. Another thing is that, as I said, that they increase the option sellers margin, right? So that is only an increment of 2%, which is puny, not so much. Maybe some firm might be shorting like 10,000 quantity, they will now short like 9,500 quantity. That's it, right? I don't see any sort of another sort of change in that, or any sort of a thing that will definitely help people reduce volumes. You may say that contract size increment will definitely help, but the thing is that anybody who is trading, okay, any gambler who is trading, I'm going to tell you, people who are losing money, they are not losing money by trading one lot. They are trading multiple lots, right? And so if you are increasing the lot size by 3 times, does it even matter? Because if someone is let's say buying Nifty's 100 quantity, right, in let's say options every week or on every expiry, they will just buy 75 right now, which will be one lot, right? So it does not really matter even if you increase the lot size by 3 times. So in my opinion, these changes are just useless, and they will mostly hurt a lot of traders who are in this in a disciplined way and who are in this for the long run. But you have to adapt to the market. You cannot really keep on just complaining, right? You have to adapt. And there are again many other avenues where you can make money in the market. Options are not just one single thing, but again, I will talk about those also, and I will actually make a dedicated video on this once these changes are closer to coming into action, which is November 20th, right? And at that time I will definitely make a video for you guys to assess and to tell you what are the other options in trading where you can make money. Because if options are out of the game, now where should you focus more? Okay, is it equity, is it some other thing like forex or something? I will definitely make a video for you guys at that time. But let's move on to now another thing, which is China has announced a major huge stimulus plan. Okay, this was not previous week but a week before that. So I am covering this right now because I didn't make a podcast episode last week, but China has announced a like a crisis level stimulus plan. Like they are in a very bad recession and they've announced this plan. Okay, they are not in a very bad recession, but they've announced this plan and it looks like they are in a very bad recession. That's why they've announced this plan, or they are foreseeing a very bad recession in the coming few months, where they've basically injected hundreds of billions of dollars of liquidity in their economy as of now. They are deciding, or they have already. Like, I'm going to tell you some major few changes. China cut the reserve requirement for banks by 0.5%. So basically banks will need to keep a little bit less capital as extra reserves so they can lend out a bit more. Then they've also cut the 7-day reverse repo rate by 0.2%. That means banks will be encouraged now to not keep their money with the government and to maybe lend it out to people in the economy. China has also lowered the mortgage rates. So they've actually told banks to lower the mortgage rates of the loans that people have taken. They've also injected $142 billion of fresh capital into their banks. They've implemented forceful rate cuts, interest rate cuts, as I said basically previously, right? So this is a sort of a crisis level action. Okay, China has been in deflation since a few months now. If you see, China has actually seen prices going down of the overall products in the economy. Deflation is basically when prices are going down. You see inflation when prices are going up, and deflation is when prices are going down. And China has been seeing deflation in the country since a few months now, and a lot of slowdown in each and every sector. Unemployment is actually at a decadal high right now. So that's why China has decided to do so many major changes basically, and all of these major changes are basically some sort of a stimulus plan for the economy to revive the economy back up. And that's why if you see, China's stock market has just rocketed in a straight line 90-degree. Okay, because Hang Seng in the last 15 days has risen by 30%. The Shanghai SSE Composite Index has risen by 20%, if I'm not wrong. And this has come at the cost of our markets. Since the last few days, if you see, our markets are seeing a very brutal sell-off. And the reason is that people are shifting heavily from Indian markets, shifting their money heavily from Indian markets to the Chinese markets, because of which you are seeing that FIIs are selling very drastically, right? Since the last few days, if you see FII figures, they are selling heavily. So basically what they are doing is that they are exiting all of their investments in India and they are pooling that money into China's stock market, because of which if you see a lot of money going into China's stock market and a lot of money exiting India. So, and this is also actually sort of you can say is expected, because people were underweight China as of now. Basically they had given less weight, you can say, or less capital allocation to Chinese stocks as compared to Indian stocks, and Indian stocks were very overweight or in their you can say in people's portfolio, especially FII's portfolio, right? So now what has happened is that a lot of these people are now reversing that decision. They are exiting India because India is already trading at a very premium valuation as compared to its peers, and that's why they are exiting India and entering China, because of which what you are seeing is sort of FOMO also. You have to understand that just an increment of 30% and 20% in its indices. Some of those indices have even risen even more, right? This is also a bit a bit fueled by FOMO also. So, if you see, should the index rise 30% in just a few days? I don't think this is just a sort of a fundamental change. You have to understand that this is also driven by FOMO, by a lot of people. Okay, a lot of people are doing FOMO and they're investing into China, and I've seen a lot of people in India itself who are, you just go to Reddit and open any subreddit, or you can say any channel named as Indian stock market. There is one channel named as Indian stock market, one is Indian Wall Street bets and all that stuff. But I don't care about the naming. But a lot of people are investing in China, looking at this news. But I want to tell you that these stimulus packages, they don't revive the economy in the next few days itself. Okay, they will take years to come into action and to show results. So you will not see China's economy tomorrow rising by 10-12%, or China's GDP rising by 10-12% tomorrow itself. That will not happen. This this will be like a slow revival in China's economy. You will not see a very big uptick in the employment numbers, in the growth numbers tomorrow itself. That will not happen. But a lot of people are trying to get into China at any rate, at any cost. And this can be harmful for you. Keep this in mind. The way the FOMO has been created for China stocks, you have to understand that the same way China stocks can also see a very good correction now, because a lot of people who would have bought at the top, as soon as a little bit of correction also comes in, these weak hands will start to exit, because of which you will see a cascading effect, and you can also see a very good correction. Even if markets see a 10 China's indices see a 10% correction from here, I won't be surprised, because a lot of people who entered into FOMO will be exiting also in that same FOMO, in that same frenzy. Okay, so I want you to remember that don't jump onto the bandwagon so fast. You have to understand, a lot of people think that this is very great, amazing. China is now the leader of the world. China will, just soar in the next few years. Whatever happens in the world, China will definitely outperform that. This is not how things go. You have to understand that all of these measures that have been taken by the government, they will take time to show results. And in that time, a lot of things can happen which can again put a lot of pressure on China. Maybe not internally. I mean, maybe those pressures might not be internal, but from the external world, from other countries. Okay, so I want you to remember that and not jump onto the China's bandwagon. Okay, just stay on the sidelines for a while. Look at the situation when the valuations come down a bit, when things have settled down, when nobody is talking about China, then you enter. Because if then you enter, then you have a sort of an advantage of a first mover advantage. Sure, you might not be the first mover, because the first movers are already making a lot of money, but you still will be entering at a point where a lot of people are not paying attention, and that is a much better point to enter. But these were the things that happened in the last 2 weeks, you can say. And now let's move on to the things that are going to happen next week, because the next week is a bit of a busy week and we have some important data points that we need to talk about. Now, next week is filled by major events, starting off with Wednesday, where we have the RBI's interest rate decision, where it is expected that RBI will leave the rates unchanged at 6.5%. So no change in rates, but again, RBI can change rates also, because the US Fed has started to change rates. Now again, Shaktikanta Das, the RBI governor, has said that they will not be following the Fed's footsteps over here. Okay, if they feel like they want to change rates, they will change rates, or else they will keep the rates unchanged. Now, should the RBI change rates? In my opinion, it is not really necessary to change rates, but if they do, it will be definitely a good thing. Okay, so definitely RBI can change rates in the coming week. If that happens, you can definitely see an up move in bank nifty and a good short covering also, because due to the outflows, as I said just a few minutes ago, that due to the outflows that are happening, because a lot of money is going into China, a lot of short positions have been also made in the market. Pros have made a lot of short positions, FIs have also made a lot of short positions. That means if RBI starts to come and give you a good, you can say a good news by, let's say reducing the rates, that means you will see a good short covering in bank, especially bank nifty. For nifty it might not be that much, but for bank nifty especially, you can see a good short covering. But again, if you want to be updated and keep exactly know where the short covering will come, how the short covering will come, definitely follow me on a day-to-day basis and watch my daily analysis videos, because every day I analyze the market based on what is happening. Okay, so that is out of the way. But at that day itself, after overnight, we also have the Fed's FOMC meeting minutes. So basically the Federal Reserve has a meeting where they discuss a lot of things, how the economy is doing and all that stuff, and then they release what they exactly discussed and what they're expecting from the markets. So this FOMC meeting minutes will be an overnight thing, and they will come at Wednesday night. So that means the effect of these Fed's meetings will be seen on Thursday in the market at the opening. Okay, so keep that in mind. Don't take overnight positions on Wednesday, rather think about making some new positions on Thursday. But that you should also not take overnight positions on Thursday, because on Thursday we have the CPI data in US, the US CPI data, where the expectations are that CPI will come out at 2.3% on a year-over-year basis. Last time CPI came out at 2.5%, again a good reduction. And if this time also CPI comes out at 2.3%, you will see markets rocketing again. Okay, so keep that in mind. However, if let's say the CPI does not see a very good decrease, like now the expectations are 2.3%, right? So if CPI comes out at 2.4 or 2.5%, you will see a very good correction in the market also. So be ready for that. I would say don't try to, don't try to, what can you say, don't try to front run the event or anything. Don't try to predict, rather try to react the next day in the market. And the core CPI is also expected to come out at 0.2%, but on a month over month basis. Now core CPI is very important, because core CPI has been proven to be very sticky as compared to CPI. So CPI is definitely coming down, but core CPI not so much. Core CPI is still pretty high as compared to CPI. So that's why you have to also look at how the core CPI is coming, because maybe CPI numbers might be good, but if the core CPI numbers are bad, market might still react badly to the whole news. Okay, so expectations are that core CPI will come out at 0.2%, but on a month over month basis. Okay, so that is it for Thursday. And then on Friday, we have the PPI data, Producers Price Index data. Basically, you can say the wholesale prices of things, right? So on a month over month basis, it is expected that it will come out at 0.1%, and the core PPI on a month over month basis is expected that it will come out at 0.2%. So a lot of data points that are going to be in the market starting from Wednesday onwards. So if you want to take any sort of overnight positions, please take it till Tuesday only. Do not take any overnight positions after Wednesday, because you have multiple events. And let's say, the FOMC meeting minutes are a good thing for the markets. The Fed says something good in the minutes, so markets can react positively. But then the next day CPI data might come out bad, because of which markets might reverse and come down. And then after that, on Friday, the PPI data might come good and the markets might again reverse higher. So that means you can see a lot of volatility in the coming minutes, because you have a lot of important data points that too, basically simultaneously every day. So that's why, as I said, that if you have any sort of overnight position, square it off on Wednesday, because even on Wednesday, you have the RBI interest rate decision at 10 a.m. and sometimes the RBI interest rate decisions can also be very volatile, especially because of what the governor says after the interest rate decision is announced, because sometimes the governor might not change anything with the interest rate, but after that he might say that the reserve requirement ratio for the banks is reduced, which will be a big positive for the banks, because of which you will see a very good blast even after the interest rates are kept unchanged. Okay, so I hope you guys understand that. Now let's move on to the IPOs that are coming in our markets next week, and should you apply to them or not. Now we only have one IPO, and that is of Garuda Construction and Engineering Limited. Okay, so this IPO is a 264 crore IPO, out of which 173 crores will go to the company and the rest 90 crores will go to the promoters of the company who are selling their stake. Okay, so the IPO opens at October 8th and closes on October 10th. And first of all, let's talk about, should you apply in this IPO for listing gains and listing gains only, not for any sort of investment purposes? And the answer as of now is no, because the gray market premium, which indicates how much listing gain you will get estimated, okay, is going on at 19%. So this is very less, and the risk that is involved is not worth it. Okay, so if let's say somehow the gray market premium comes up above 40% by the time this IPO opens up, and sorry, by the time this IPO closes, that is by the time October 10th comes in, if the gray market premium comes above 40%, you guys can then go ahead and apply to this IPO. But until then, please avoid this IPO if you want to apply to it for listing gains only. Okay, if you so that's out of the question. Okay, listing gains. But now, should you apply to this IPO if you want to invest in this company? Is this a good company to invest in, or is this not a good company? Should you skip this IPO? So first let's talk about what the company does, and then we'll go on to what the company is planning to do in the future, and then ultimately should you apply to this or not. So the company is a construction company. It constructs residential, commercial properties and all that stuff. It is now venturing into infrastructure and industrial constructions also. Okay, so it has now just like right now ventured into those two segments. Okay, but before that it has a good record of constructing good record of many residential and commercial construction, or you can say projects also. Okay, so what this also does is also that it provides operational and maintenance services also. You can say these are like what can you say, like additional services that the company does, like mechanical, electrical and plumbing services, all of these services also. But these are sort of like additional services. The main business is, as I said, that construction of different projects, right? As I said, residential, commercial and now industrial infrastructural projects also. Okay, so now if you see, as I said, that company has a good track record of taking up many residential and not infrastructure but commercial projects. Okay, but now let's talk about how the revenues of the company have been doing, how the profit has been coming in and all that stuff. So if you see, in FY 2022, the company made a revenue of 77 crores, and in FY 2024, the company made a revenue of 154 crores. And you would be like, okay, very good growth, but you have to see that in FY 23, the revenue was actually higher at 161 crores. So the revenue has actually gone down in a single year, if you see. And on the other hand, same thing with profit after tax also, where in FY 22, the profit after tax was 18.7 crores. In FY 23, it went up till 40.8 crores, and in FY 24, it actually came down till 36.4 crores. Again, the growth in FY 22 to FY 23 is very good, but it looks like the company is losing its momentum. I think this could be very well because of the fact that the company has entered into infrastructure and industrial projects also. And when you enter into new spaces, you definitely face a good amount of competition also, and you just take time to place your foot solidly into the ground, into some new ground. Okay, so because of that, this is a bit of a concern that the companies financials are slowing down. Another thing which is a bummer for me is that the company only has an order book of 1408 crores as of September 20th 2024. Okay, and for a company of this size, okay, this order book may not be very big in my opinion. The order book, definitely it is still big if you see the as of FY24's revenue, the order book is almost 10 times the size of the revenues, right? And you can say that this is definitely good, not a bad thing, but still I would have preferred if the order book would have been a bit more bigger um, as compared to what it is right now. Although the company does say that it is going to increase the order book, it is going to increase the momentum at which the order book is increasing, but again, I'm not going to go with the company's claims all of a sudden, because again, this is a new company that is coming into the market, so I would not want to go with the company's claims. So because of that, I don't think this is a very good company as if you want to invest in. You have many different infrastructure companies or construction companies which can give you much better exposure to the market, at a fairly decent price also, even right now. So that's why I wouldn't want to invest in this company as of now. So if you want to invest in this company, I would say skip this IPO. Okay, wait for the company's IPO, wait for the company to get listed. Now if you see, the price band is from 92 to 95. That means if you apply to this IPO and you get allotted, you will get allotted the shares at 95 rupees. So what I would rather suggest is wait for the IPO to get listed at whatever price it gets listed. It is not our it is not our business. Rather wait for the price to come down till at least 80 rupees. Okay, 75 to 80 rupees, then think about investing in this company. But even at that price, I would say, like, there are better companies out there which can give you the same exposure to the sector that this company is performing in, and you can then invest in those companies. I don't think you have to be in any sort of a FOMO of investing in this company. I think, as I said, that since there are other companies, right, any sort of construction company you take, you know they are definitely better than this company. Like, I'm gonna tell you one which I really like is that I forgot the name. Capacite Infra Projects. Okay, that is a good company also. So you can definitely look into applying in these companies and not this company specifically. So for investment purposes, do skip this IPO, don't apply in this. But now let's move on to the market analysis for next week. Now talking about the market analysis for the next week, if you see Nifty falling 4.4%, Bank Nifty also falling 4.4%, and this was mostly because all of the money is being pulled out of Indian markets, and it is being pushed into China's market. If you see Hang Seng just flying through the roof over here, it has gone up 30% in the last 3 weeks over here. Nikkei on the other, not Nikkei, sorry, SSE composite, if you see, moving up a lot, although this week SSE composite was just open for, if you see, just one day over here, that was on Monday, and the rest of the days it was closed due to some festival. I think they had some festival, but that is not our or you can say that is not what we are going to focus on right now. If you see, all of the money is being put into China's stock market, because of which a lot of money is being pulled out of India, because of which you will see an extraordinary weakness in the market. And if you see markets just moving down, every rise is being sold. Okay, and yes, I didn't participate in this rally because, again, I just didn't feel comfortable over here. Okay, and that is fine. Okay, but now what can we do next week is going to be very simple. Now, as of now, markets have reached a good place where they can take a good support. So right now the downside is pretty limited for both Nifty as well as Bank Nifty. Both of these indices have reached at a crucial point where they can take support and start to move. Bank Nifty might have a little bit more place to move down, but again, as I said, that both of these indices are now at a place where they can take a very good support. For Bank Nifty, the first support will be near 51,000. 51,000 is going to be a very crucial level where any sort of a pullback, sorry, not pullback, but any sort of a reversal sign of a reversal that you see over here, you guys can go ahead and take a bullish trade over there on a positional basis. Again, for a pullback at least till 52,500 on the upside, this will be the area where 400 to 500, 52,400 to 500, this 1400 point pullback can come in the market. Okay, and don't think that a 1400 point pullback is not a big deal in a market. Even if the market has to go down, a 1400 point pullback is not such a big deal over here. So 51,000 will be the first level by which Bank Nifty needs to defend. Okay, if 51,000 to 50,800, okay, this zone of 200 points even till 50,800 is fine. Okay, if 51,000 to 50,800, this zone that I made, if markets come over here and they defend this zone, you will see at least a, as I said, that at least a up move of 1500 points from here, which could be a pullback, and then we can again take a selling position, or maybe markets might be in a range. Okay, that is something that we'll see afterwards. Okay, but as of now, Bank Nifty still has some space left because Bank Nifty has closed at 15,400, so you still have 5 to 600 points on the downside, or 4 to 600 points on the downside, which you can still capture. But still, I would suggest don't take a sell over here. Rather, the best place to take a selling position will be near 52,000. Okay, if Bank Nifty comes near 52,000 to 51,900, you can say, in this area, then go ahead and take a selling position on a pullback over here. Okay, and markets are going to open with a gap up because US markets have started to move up, so markets are going to open with a gap up. So you can say 51,800 to 52,000, in this 200 point range, wherever you see that the market has started to make negative price action again, you guys can go ahead and take a selling position from there. Again, as I said, till the target of 51 to 50,800. As of now, don't keep very big targets in the market. Those 1,000 point, 1,500 point targets are now done. As of now, you cannot keep again the same type of big targets because now the downside is pretty limited, and now the markets might definitely go for a pullback over here. And 50,800 especially will be a very important level. If markets close below 50,800, I think we can see a very major correction continuing in Bank Nifty at least till then 49,000 to 48,500 also, because then Bank Nifty will be breaking major zones, and unless something changes fundamentally, Bank Nifty can continue this weakness for a few more thousand points over there. But that is it for Bank Nifty. Now let's talk about Nifty, because Nifty is also at a not a very crucial place, but still a crucial place. Now for Nifty, the level which is going to be important, which is sort of a make or break level after which the trend can change is 24,000. Okay, but 24,000 is still very far away. It's 1,000 points far away, and yes, markets did fall, you can say 1,100 points. Markets did fall 1,100 points this week, but I don't think this type of weakness with the same type of strength will continue in the next week. But again, where can you sell at higher levels? I'm sorry. But first of all, let's talk about the levels from where Nifty can see a pullback. And the first level is 24,950. Keep this level in mind. And again, Nifty has taken some support over here in the end, exactly from 24,960. So yes, Nifty has reached this level. If Nifty starts to show you any sort of very good buying, you can see a pullback in Nifty, which can all the way go up till 25,600 to 25,500 in this area. So again, a 500 point pullback in Nifty is also possible. Even 800 points of pullback is also possible to 25,800. So Nifty can basically fill this gap also. It will not be a problem for Nifty. So what you need to do in Nifty is going to be very simple. If you want to capture in a selling trade in Nifty, there is not much space left. If Nifty has to go down, it will go down max to max till 24,000, not max to max, but if Nifty has to take support, it is already at a good support. And even if this support breaks, 24,800 to 24,750 will be a very good support for Nifty, from where Nifty can again take support. So taking a selling position in Nifty is not that much recommended, because Bank Nifty still has a good amount of space left. So take a selling position in Bank Nifty. However, if you want to take a selling position in Nifty on a pullback, the best place will be 25,500 to 25,450. Okay, but that is a far away place, right? If you want a closer level where you can take a selling trade, that will be 25,250 to 25,300. Over here, if you see that the market is again taking very good rejection, you guys can go ahead and take a selling trade. Okay, but this week, please keep this in mind that the volatility will be on the higher side, because now the markets have already seen a trending move. Now a volatility phase will start in the market, and so that's why reduce your quantity a little bit. If you made a very good profit by shorting the markets, try to book your profits, or if you've already booked your profits, as I said, reduce your quantity. Don't go completely with full quantity, or completely very aggressively thinking that the markets will continue to fall like they did in this week. That will not happen in the next week also, because again, I think China's stock market will also see some correction in the coming week, where a lot of people who had bought China stock in this early entry over here, who had taken this early entry, they will start to book their profits. Anyone who would have, let's say, entered over here, they will now start to also book their profits. So I don't think the our markets will again see the same sort of a pressure that they've seen in this week. Okay, so this week, the bottom can also be made, but that is not confirmed. For that, we will need to look at how the market is performing every day, and if you want to know how the market is performing every day and how can we trade in the next day, do watch my market analysis videos, my daily market analysis videos, so you can understand how to trade the markets for the next day, for the coming day. But yeah, that was it for the market analysis for the next week. So yeah guys, that was it for this week, and thank you very much for watching till the end. I hope you guys really liked this episode, and I hope you guys learned something new from this episode which you didn't know, and I hope I've added a little bit of value to your lives, and a little bit, and I hope I've made you a better market participant. But yeah, that was it for this week. And if you have any sort of suggestions for the podcast, if you want something changed in the podcast, if you want something added to the podcast, do let me know in the comments, or just DM me on Instagram, and I will make sure that I make those changes if they are possible. But yeah, that was it for this week. I will see you guys in another episode in another week. Bye bye.